Hello everyone, welcome back to another video in relation to our SFDR series. In this little episode I wanted to discuss the principal adverse impact statement. Every financial market participant, such as a fund manager, would need to consider on a comply or explain basis, or when they have more than 500 employees, it's mandatory to how to issue this statement. It is a very complex decision to be made in this regard because many information is not yet available. In particular, all the level 2 in respect of this and what factors to be considered is not yet available. So many managers are struggling of what decision to take now in this regard. Those who take a decision to really strictly comply with this we have seen so far are following the level 2, at least the principles, and to the extent that they can actually apply these standards. So when following the current draft level 2, what would you need to consider? Well, there are 6 aspects of such a statement to be considered. In the first place, there is a little summary of a couple of pages which is making a reference to the reference period of the statement. It needs to be refreshed every year, so that is some practical information and also to which type of financial market participant this is applying to. Then in the second place, it makes a reference to those factors considered. Now in the draft statements being included in the draft level 2, you see 3 types of annexes with all kind of factors, and in that sense you would need to pick the factors that you would consider in your PAI statement when making any investments. And it really particularly refers to those investments that you're conducting any due diligence on. So it's really for the identification, the measuring and the monitoring of your investors that you use this statement in the first place. So in the third place, you would need to identify and to prioritize the factors that you actually do consider in this statement and to highlight their importance, and also how you would implement your statement from a governance standpoint. Then in the fourth place, you would need to describe the actions which you actually have undertaken in the indicated reference period to comply with this and how you could potentially improve in the future. The fifth point relates to the engagement policy of the Shareholder Rights Directive 2, if any. So you would need to have a brief reference to that. And as the final point, there will be a reference to any international standards, such as of the ILO, that you would need to consider. So in short, it is quite difficult to be complying with this PAI statement. Many data is not yet available to actually be able to effectively monitor. It will also take some time before all taxonomy regulation obligations and definitions have been clarified into detail. So it's very difficult to say in a general manner how fund managers would need to comply with this. It really depends upon the specific case at hand, what is good to be done. And in this sense, I could also understand if the decision would be made to simply make use of the comply and explain that not sufficient information and regulation is yet in place to comply with this, so that the PAI statement would be considered in the future, but not for the moment. So having said this, thanks for watching and hope to see you next time. Bye.